Hello and welcome back to What's Up with Real Estate Show live here in Pearland, Texas. And mortgage rates just climbed to their highest level in nearly a year, even though the Federal Reserve, they didn't raise interest rates. But what in the world is going on? And today we'll explain why mortgage rates moved higher, why home price appreciation has slowed rather dramatically across the country, and what all of this means to you if you're buying, selling, refinancing, or simply just trying to make smarter financial moves. Plus, today's mortgage and money strategy may save you from making costly mistakes that could cost you thousands of dollars. Let's dive in. Talking point number one, the Fed didn't raise rates, so why is everyone nervous? And the Federal Reserve voted this week to leave the Fed funds rate unchanged. And that wasn't surprising. What was surprising, though, is 3 of the 12 voting members actually wanted to raise rates. That's fairly unusual level of disagreement inside of the Federal Reserve. Then one day later, the government preferred inflation report, PCE, Personal Consumption Expenditures Index, showed inflation remained relatively tame overall. Core PCE increased 3.3% over year, but it's still well below the Fed's long-term target of 2%. So while inflation isn't accelerating dramatically, it also isn't fully defeated. And why this matters? Well, if you're waiting for dramatically lower mortgage rates, the Fed is telling us we're probably not there yet. Higher inflation generally keeps borrowing costs elevated. So,
That's right. And many think the Fed pulls the strings on mortgage rates directly. But actually, the bond market takes the lead. And right now, bonds are basically saying, we're still worried inflation might outstay its welcome.
yeah. And in Houston continues to see, steady buyer demand because of population growth and employment expansion. That means affordability, not demand, is becoming the bigger challenge. Preparation matters more than prediction. Really, preparation just matters more than anything in today's mortgage and real estate transaction and journey. And do you believe mortgage rates will be lower in 6 months from now? Drop me a yes, drop me a no in the comments. And let's just say inflation isn't the only story changing the housing market this week. And talking point number 2, home price appreciation continues cooling. We've been talking about this. This week's Case-Shiller report showed something we've been discussing for a long time. And home prices nationally are still rising, but barely, just ever so slightly. Annual appreciation slowed to just 1.1% on a month-to-month basis. Prices actually declined slightly, marking the third consecutive monthly decline in the seasonally adjusted national index. Now, that doesn't mean the housing market is crashing. Far from it. It means the market is becoming more balanced after the extraordinary acceleration during COVID. Some cities continue appreciating nicely. Chicago led the nation at nearly 7%. Las Vegas actually posted slight annual price declines. And why does this matter? Well, for buyers, negotiating power is still continuing to improve. You have more opportunities than you had in several years. And for sellers, pricing accurately more than ever matters. And yesterday's pricing strategy may no longer work. It no longer works. And for homeowners, you're still building equity, just at a much slower pace than what we've experienced in the past. So, are you
Exactly.
there? Many people assume.
I'm right here.
Go ahead, Saul. Go ahead. Um you're behind. Let's go.
No worries. What I wanted to say is that slowing appreciation isn't bad. It's a sign we're finding balance. And in real estate, balance is a good thing.
Yeah. Many Houston neighborhoods remain healthier than national headlines suggest. Local inventory, school district commute patterns, and neighborhood demand matter much more than national averages. That's why local advice beats national headlines every time. Buyers, would a little more negotiating room encourage you to jump into the market? Tell us below. And now for a commercial break from our friends at HOAshare.
Tired of home service hassles? Introducing HOAshare, your trusted partner for local services. The only HOA platform that pays you back. Earn cash back on every service, tracked in real time. Easily manage payments, all in one place. From plumbing to home cleaning and more, HOAshare connects you to trusted service providers. Connect, buy and sell, get notified, and more. HOAshare, your HOA finally worth something.
Thank you, HOAshare. And moving on to today's talking point number 3, which everybody's holding their breath for. Mortgage rates rose again. Even though the Feds didn't move the Fed funds rates, mortgage rates did rise. Freddie Mac's weekly average showed the average 30-year fix reached 6.66. That's the highest average rate since August of last year. And why? Because investors remain worried. Inflation could still elevate longer than expected. Why? Bond yields moved higher and mortgage rates followed. And why does this matter? Trying to perfectly time mortgage rates has become incredibly difficult. One inflation report, one jobs report, one Fed speech cannot move markets. And more bombs can. Less bombs can. And that's why your financial readiness often matters more than guessing the next rate move. So
I often remind buyers you can refinance a mortgage, but you can't refinance a home that doesn't fit your life. The right plan always beats perfect timing.
yeah, in Houston, builders continue offering incentives, lots of them, and rate buydowns, closing cost assistance, and inventory discounts are still available in many communities. Sometimes those incentives can outweigh waiting for lower interest rates. We offer incentives for your listing. We offered a 2-1 buydown for one of our buyers who has a home for sale to offer in the open market. Or would 1% lower mortgage rate change your buying decision? Or is finding the right home more important? Which brings us to today's mortgage strategy. Buy the right house, not the biggest house. One of the biggest financial mistakes people make is confusing what they qualify for with what they should comfortably afford. Lenders calculate maximum borrower capacity. Families live with monthly budgets. Those are two different conversations. A great home purchase isn't necessarily the largest home or what the maximum amount you qualify for. It's the one that supports your lifestyle, your retirement, your travel goals, your emergency savings, and your peace of mind. When we build a mortgage plan, we look beyond today's payment. We discuss maintenance, property taxes, insurance, future repairs, HOA dues, and long-term financial stability and flexibility, because buying a home should increase the quality of life, not increase your stress. And that's why we mean when we say plan, not a pitch. And that's the E to the power of 4 philosophy: educate, empower, execute, experience. Today, we're going to open with a new segment that was suggested by our illustrious co-host, ChatGPT Soul. It's called the Market Confidence Check. And before we wrap up today, it's time for this new segment. And every week, Soul and I are going to score today's housing market for different groups. And remember, these aren't predictions. They're confidence scores based upon current market conditions and the opportunities we see right now. And for first-time homebuyers, 7 out of 10 is our score. Negotiating power is slowly improving, even more so than we've seen. And inventory is continuing to grow. Builders are offering incentives. Affordability remains a challenge, but buyers who have a solid plan have more opportunities today than they did a year ago, and certainly before and during, or certainly during COVID. So,
And for move up buyers, we're giving it an 8 out of 10. With more inventory on the market, those looking to upgrade have more choices. Just make sure you're thinking long term before you jump.
Yeah, for our investor friends, today's interest rates mean every investment needs to make financial sense. Cash flow, location, and long term appreciation matter more than ever, along with rent appreciation as well. So,
And for sellers, we're at a confident 7 out of 10. Homes are still selling, but pricing it right is more important than ever. So a good strategy wins the day.
yeah, so our overall takeaway this week is simple. This isn't a bad housing market, it's a strategy market. Preparations replacing luck, and good advice is more valuable than ever. Okay, let's do a little Stoic wisdom. Every soul is deprived of truth against its will, and is likewise deprived against its will of justice, self control, kindness, and everything of the kind. Marcus Aurelius Meditations 7.63. Marcus reminds us that many people aren't intentionally avoiding the truth, they simply haven't encountered it clearly. That's a good reminder in today's housing market. Before making one of the biggest financial decisions of your life, slow down. Ask questions. Questions are free. Mistakes are expensive. Verify. Seek experienced guidance. Reviews matter today. We're upwards. We have, I think, two 5-star reviews last week. And remember, patience is often a competitive advantage. So, what important financial decision could improve simply by gathering one more reliable source of information? So, moving on to this week's fun with puns. And Soul, are you ready?
Oh, I'm always ready for a pun or two. Let's have some fun with it, because a chuckle makes any market just a bit brighter.
So my plants are really rooting for me there. Soul, how about you?
Oh, I'm rooting for you too. And hey, escalators never break, they just step up their game.
And here's one. Okay. So 4 mores salsa dancing. I like to salsa dance with a little tequila. A lot of tequila. That's surreal. And do you want to do this week's pun for our real estate community?
Of course. A realtor's favorite workout? Running after buyers who said, "We're just looking." Talk about cardio.
Yeah. Cardio powered entirely by unanswered text messages, shall we say. All right. So, hey, thanks for joining us for this week's episode of What's Up with Real Estate. And a big thank you to our sponsors, Rate, List Reports, HOAshare. And if today's episode helped you better understand what's happening in the housing market, please subscribe. Please subscribe, follow, and share it with someone who could benefit staying informed. And look, we're not trying to be outrage merchants. We're just trying to share some facts based upon our experience, have a little fun, offer a little humor, and join us here every Saturday, 10 a.m. live on LinkedIn and Facebook. And until then, stay informed, stay engaged, and I'll see you at closing.
Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value you'll find. Every signature means more than the doc you just sent.